Okay, let's dive in. The crypto world, well, it's never boring, is it? But sometimes it's downright bonkers, and these past few weeks definitely fit that bill.
Absolutely. Keeps you on your toes.
For sure. So we've seen huge policy talk, surprising money movements, big market drama, and honestly, some really bizarre stuff too. This is our deep dive into all of that, looking specifically at late July, early August 2025.
Yeah, quite a period.
And we're pulling this together from a bunch of recent market reports, news outlets, you know, CoinDesk, Crypto Economy, Cointelegraph, Blockbeats, Binance, even the Wall Street Journal.
Good cross-section there.
Right. And our mission really is to pull out the key insights from all these different takes, help you make sense of what's actually driving the market, how policy's shifting, and, well, what it all might mean.
Sounds good. It's definitely a landscape that changes fast.
Yeah.
Just when you think you've got a handle on one thing.
Exactly. Something else pops up. But beyond the usual volatility, the big thing right now, the real bombshell, has to be this new policy strategy.
Oh, yeah. The working group stuff.
Exactly. July 30th, the Trump administration's working group on digital asset markets basically dropped this paper calling for America's golden age of crypto. Big words.
Very big words.
Yeah.
And quite a shift.
Totally. And they're talking specifics, treasury-backed stuff like regulatory sandboxes.
Which lets projects test things out, yeah.
Right. Federal ETFs making it easier for traditional investors and these safe harbors for DeFi projects. It's like they're rolling out the red carpet for Wall Street, officially.
It really is a massive pivot for the U.S. I mean, after years of feeling like they were stuck in neutral on regulation or even, hostile.
So analysis is a good word for it.
And if this actually happens, if these proposals become real policy, well, it could mean serious mainstream capital flowing into crypto. And fast.
It feels like they're trying to actively encourage it now, not just react.
Precisely.
Yeah.
It signals the U.S. wants to lead here,
Yeah.
which could really change the game globally.
And almost perfectly timed with that policy news, the money started moving. Big time.
The inflow numbers were pretty wild.
Get this. July 28th, $1.9 billion in one day flowing into crypto investment products.
Wow.
Which pushed July's total to a new record, $11.2 billion. And the really interesting part? Ethereum grabbed the lion's share, $1.59 billion.
Yeah, Ethereum dominance was clear. Solana and XRP saw some decent interest too, but ETH was the story there.
So what does that tell us?
Well, it tells us crypto isn't just, memes and tweets anymore. It's becoming institutionalized. That's undeniable.
Right.
And Ethereum leading like that, it suggests institutions aren't just dipping their toes in with Bitcoin anymore. They're looking at Ethereum's utility, its role in DeFi, NFTs.
Yeah.
It's becoming a core holding for more sophisticated players.
Okay, so big money's coming in, policy's looking friendlier, but how did that actually play out for specific coins? Let's take Ethereum. Because it was weird, right? We saw a nearly 10% sell-off over the week.
Yeah, on the surface, it looked pretty negative.
But then almost immediately, you had a whale just sweep in, grab $300 million worth.
Mm-hmm. Big conviction buy.
And then SharpLink. I mean, over $108 million in USDC spent in just 2 days to buy, over 30,000 ETH?
Bringing their total stash to like $1.65 billion worth.
Yeah.
It's staggering.
So what's going on there? Sell-off, but massive buys.
It's that institutional chess match playing out.
Yeah.
These aren't panicked moves. They're strategic. Some analysts are saying, this dip is just a discount.
A buying opportunity.
Exactly. They call it bullish divergence. Price goes down. But underlying indicators suggest buying pressure is actually building. It shows deep conviction from the big players.
Yeah. So the thinking is, despite the pullback, ETH is still on track. People are talking $15,000, $16,000 this cycle.
That's the thesis, yeah. If the on-chain buying continues, and maybe we get positive news on ETFs eventually, that synergy could still send it flying. The long-term bets seem very much alive.
Okay, so Ethereum's story is complicated, but maybe bullish underneath. But XRP, that was different.
Yeah, XRP had a much rougher week. More straightforward drama, you could say.
It just plummeted overnight, didn't it? Like 9% down from over $3 to $2.75.
Heavy selling, big volume, looked like institutions heading for the exit.
But it did seem to find a floor around that $2.75 mark, that psychological level.
We did stabilize there, yes. That's what we'd call a textbook capitulation move. Basically, peak fear, sellers just give up.
So the worst is over. Or...
Well, that's the million-dollar question now, isn't it? Is this the bottom, the point where it bounces hard? Or does that selling pressure break through $2.75 and we see another leg down? The market's watching that level very, very closely.
Right. Okay, so beyond the individual coin dramas, there were also these bigger forces at play, the macro stuff.
Always the macro, yeah. It's
Yeah.
the puppeteer in the background.
So August 2nd, we got weak U.S. jobs data, geopolitical tensions rising, new tariffs, and suddenly it was risk off everywhere.
Classic market reaction. Fear takes over.
And crypto definitely felt it. Bitcoin down 1-2%, but ETH, XRP, SOL, DOGE, they all dropped harder, like 2-4%.
Yep. Still acts like a volatile alt equity in those moments,
Yeah.
sensitive to that global economic heartbeat.
But here's the really weird part, tying back to what we discussed earlier. Despite the positive U.S. policy signals, the Bitcoin spot ETFs saw outflows, huge ones.
Yeah, that was surprising. A $642.9 million net outflow.
How does that make sense? Good policy news, but money leaving Bitcoin ETFs.
It's a critical disconnect. It shows that macro shocks, those big global fears, can still dominate short-term decisions. Retail sentiment, maybe even some institutional caution, hasn't caught up with the policy optimism yet.
So there's a lag. People are still spooked by the economy, even if the crypto-specific news looks good.
Exactly. Short-term fear can temporarily override longer-term positive signals. It's that tension between policy hope and market reality playing out.
Okay, so market swings, policy shifts. But then there was the other side of crypto this week, the darker, more bizarre side.
Ah, yes. There's always something weird happening.
Well, first, kind of quirky weird.
Yeah.
Someone stole the Satoshi statue in Lugano, Switzerland.
Ah, I saw that. Offering a crypto reward for its return, right.
Yeah, 0.1 Bitcoin, like $12,000. Yes, even crypto art isn't safe. Shows the weird mix of digital value and physical stuff.
A strange little footnote in the week, for sure. But kind of overshadowed by the other story.
Absolutely. Because the other news was genuinely disturbing. This case involving William Duplessis and John Woltz,
The crypto bros turned federal defendants. Yeah, that's grim.
charged with allegedly kidnapping, torturing someone, trying to force them to give up private keys. It's being called one of the most twisted crypto crimes we've seen.
It's horrifying. And it's a brutal reminder of the risks when, large sums of potentially untraceable money meet bad actors. Anonymity has a dark side.
Definitely.
And incidents like this, these really awful never-again moments,
Mhm.
they inevitably fuel the calls for stricter rules, more KYSOL, more focus on regulated custodians.
So it pushes the industry towards more control, more oversight.
It has to, right? It forces a conversation about how crypto matures beyond the Wild West phase. How do you balance decentralization with basic safety and accountability? It's a tough needle to thread, but absolutely necessary for legitimacy.
Okay, so wrapping this all up, what's the final take from all these sources? Where do things stand now?
Well, the big picture seems to be regulation is definitely heating up. The U.S. seems to be shifting from fear to maybe actually facilitating crypto growth. The next 6 months could be huge for legitimacy.
Right. And the money isn't scared. Big capital's flowing in. These multi-billion-dollar systems are buzzing. And interestingly, altcoin funds seem to be attracting cash even while Bitcoin ETFs saw those outflows.
Yeah, that's a key dynamic to watch. Also, macro risk. Still very real. Crypto still dances when the global economy sneezes, tied to jobs data, geopolitics.
And the wild swings aren't over. ETH could hit 16Ks or it could drop back to $2K. Volatility is still the name of the game.
Absolutely. And finally, ethos matters. These ugly incidents, like the kidnapping case, they really might accelerate the push for more transparency, more accountability, KYC, regulated custodians, the whole package.
So looking ahead to this week, what should people watching this space keep an eye on? What are the key signals?
Okay, definitely watch for any official White House follow-ups, press releases, executive orders on crypto. That'll give more clarity on the policy direction.
Licensing regimes, maybe?
Could be. Also, keep tracking the ETF flows, especially the altcoin funds. They're kind of an early indicator of risk appetite.
Good point. And the usual macro stuff, too.
Always. U.S. job reports, any big trade policy moves, what China's doing with the RMB, all that still feeds into the crypto market mood.
It really was a week of contrasts, wasn't it? Crypto's biggest validation in ages, record inflows, the Trump policy shift, huge whale buys.
And then the most bizarre stuff, too. Stolen statues, alleged kidnapping for keys, macro panic selling.
It really captures that core tension, doesn't it? The promise of this financial revolution versus the lingering Wild West feel.
Absolutely. And how those two forces keep battling it out, well, that's what's going to shape where this all goes next. Every twist feels like a major plot point.